Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of natural gas, the commodity on TradingView. And so I just wanted to give an update on natural gas, ticker symbol UNG, which is United States Natural Gas, and ticker symbol BOIL, which is the 2x leveraged natural gas ETF. And also, I wanted to go over some price forecasts for natural gas in the new year. And so here, looking at the natural gas chart, just wanted to point out this downtrend that we have been in really since the end of October. October 31st is this green candle, and then we've just resided in that for almost 2 months, but then around mid-December, we started to break out of that. And so I do think it seems like natural gas did find a bottom with a low on, let's see, December 13th of $2.20.9. So hopefully we don't go lower than that. And it does look like there has been some uptrending consolidation, which could be cause for concern, which I'll point out in a second. But, what I do see is that between December 8th and December 11th, there was a gap down, and getting up to fill that gap marked by this blue line here at $2.50.6. Every time price has gotten up to that level, it has more or less been rejected, but the lows following those rejections have been moving higher, which suggests that price is consolidating in an ascending triangle formation. Those tend to break to the upside as we continue to test this blue level. So I do think that is good for the commodity moving forward. I also do want to point out, though, this uptrending consolidation, which could be viewed as, a bear flag, with this being a kind of sideways pull and then this consolidation coming out from that. I don't, however, think that's the case because of this ascending triangle. And so I do think we will continue to retest the level of $2.50.6. And I do think eventually, perhaps in January, perhaps in February, I do think we will break above that and start to reclaim some of these prices that we had hit before. Specifically, I think that this Fibonacci retracement at 618, which would be a price of like $2.67, I think that will be a key level, as well as this red line at 278. The 50% retracement of the Fibonacci, which is at $2.86. And then I think a big one is going to be right around $3, marked by this orange line, and the 382 Fibonacci retracement. But yeah, so now I'm going to switch over to Webull so we can look at ticker symbol UNG, which is United States Natural Gas. And so this is the way that I, at least, am able to trade the commodity natural gas without leverage. And so this is, not leveraged, had a low of $4.50, and has been consolidating in this uptrending channel. But I do think that it, while not corresponding necessarily to this gap fill, it is testing levels that could suggest this, like the commodity, is testing the ascending triangle formation that could break to the upside. And so that gap fill level for UNG is at $5, given that the closing price of the year is $5.07. We have filled that gap, but it does seem like there is notable resistance at current levels. Hopefully, we do see a break to the upside, like going to this orange line at $6.10. And so now flipping over to BOIL, or BOIL, which is the 2x leveraged natural gas. And this happens to be the one that I currently hold. And so what we see with this is the downtrending channel, uptrending consolidation that has been testing this gap fill level at $29.46. And I also have this red line marked at $27.11. That level may or may not be significant, but it is one that I have been paying attention to. It stood out when doing some measured relations between BOIL and the commodity. So, I do think that if we are able to hold above 27.11, I do think that is significant, but, that might just be an arbitrary level. So hopefully, we are able to break above 29.46 in the coming weeks in January, getting up to levels like let's see, $45.60 at this yellow line. But yeah, we're going to have to continue to consolidate here before we can make a move higher. And I do think that will happen at some point in 2024. And thinking about that, I'm going to switch back over to the web browser. And actually, well, I should note that this is coming from, if I go to the UNG ticker, there's this link to natural gas prices forecast for 2024 from NASDAQ. And so I already opened that and I have some of it highlighted that I wanted to go over here. And so basically this is a global economic outlook for 2024. So I just have this part highlighted. So looking at North American gas markets, they might remain weak through early 2024 due to a combination of factors, such as higher than average underground gas storage inventories. So we've got a lot of gas that's going to keep price low, potential warmer than normal winter temperatures. I don't know about you guys, but I have experienced some warmer weathers, did not get a white Christmas, things like that. With it being warmer, we're going to be burning less gas to keep our houses warm. So that is something to consider. And then also weak consumption from industrial and commercial sectors and strong production growth from key U.S. basins. So we've got big reservoirs and we're producing a lot. That's going to keep price down. And so these factors are expected to keep natural gas inventories at elevated levels through the winter months, leading to restrained prices in the near term. But I do think there is some good news that follows this. So here it says, let's see, I'll just highlight this. However, as the year progresses, the U.S. supply/demand balance is anticipated to gradually tighten, potentially leading to higher spot gas prices. And so this continues that the NYMEX price for the year of 2024 is forecasted to average at $3.50 per thousand cubic feet. And so if we look up at this chart that they have, this looks like it's natural gas futures one-day NYMEX. So I believe it's the same units as that $3.50. And this is scaled the same as the natural gas chart I just went over. And so if we're currently at, let's see, like right around $2.50, coming up to $3.50 would be basically returning to those levels that we saw at the end of October, beginning of November. So coming back up to here. So I do think that there is a lot of upside for the year. And that did mention that 350 is the average for the year, at least as far as that forecast goes. So if we look at this chart, if the average is 350, coming up to here, there's a lot of potential upside. And so that would be coming back to, basically the top of this channel that I had gone over. So 350 is right around here where the cursor is. So I do think that there's a lot of hope for natural gas in the new year. However, it might be a little bit flat at the beginning of the year in January, possibly into February. Could be a great time to accumulate before moves up to 350, if not higher. And so those are my thoughts on natural gas. If you found them helpful, make sure you like the video and share your thoughts in the comments below. And also subscribe to the channel for more videos like this. Thanks a lot for watching and Happy New Year.